So what are a couple steps some beginner investors can take right now to set their future selves up for success? What's going on, team? It's Ricky with Tactical Solutions. I hope that you guys are all having an amazing weekend. I thought that I would take advantage of what's going on right now with the market. Market sentiment is very bearish. Overall markets are very oversold. Amazon just reported one of their worst earnings ever. I don't know if you guys saw this, but after reporting earnings, they dropped 14%. The reason I'm talking about this is not because the market is super bullish or the market's going to recover right away. I'm not here to sugarcoat things. I'm not here to convince you that you should invest. I want to explain to you why I think the idea of investing now can be beneficial in the future. I hope that you learned something new, and if you do, I hope that I earn your thumbs up. And also, I upload new videos every single day, so make sure that you subscribe to the channel for those daily updates. With that being said, I have been talking to not only our Learn Plan Profit group, but also our Tech But Solutions group in our Discord. And a question that a lot of people have is, is now the time to invest? I think a lot of it has to do with expectation. First off, if you want to join the conversation, I have a free Discord community, and it's the first link in the description. With that being said, I wanted to share at least 2 steps I think every beginner investor should at least take. You don't have to follow through with the execution. That would be step 3. That's only if you, again, want to kind of get your feet wet. But I think by taking these 2 initial steps, it can really get you to understand why focusing right now on how oversold the market is can really benefit your future self. I want to use 2020 as an example when the market sold off after COVID hit, right? So let me go ahead and find this. This was early 2020, and we could see here, early 2020, February, we peaked, we sold off all the way to the kind of like mid-March, and then we began to indicate signs of a recovery. Not only did we actually begin to indicate signs of a recovery and recover to previous highs, but the market continued to rally. And ask yourself a simple question. During this time, March of 2020, did things get better? No. I mean, COVID was still rising, cases were rising like never before, but things weren't getting necessarily worse, at least for tech stocks at the time. So then now asking the question, what is bringing down the market? And please do your own due diligence, look a little bit more into it. There's 3 main factors. Inflation, and then the Feds are raising interest rates to fight inflation. And then on top of that, there's Russia attacking Ukraine that acted as a negative sentiment, and then the oil crisis followed after that. Yes, there's supply chain issues, logistics issues. There's a lot of different things going on, right? And then this week, why did the market sell off? Why did Amazon sell off this much, just last week? Because of earnings. I don't know if you guys saw this, but our Learn Plan Profit group, we focus every single week making ourselves aware of what stocks are reporting earnings. We're in earnings season, meaning a lot of companies, big tech stocks, are reporting earnings. A lot of them, like Amazon, did not meet expectation. So this is where they dipped. And that's bad or unfortunate, I would say, for current investors. But for people like you and I, think about this. For people like you and I that were not already fully invested in Amazon, or maybe you weren't even invested, I asked myself a simple question. Do I see Amazon going bankrupt? Do I see Amazon, getting delisted? In my opinion, Amazon isn't going anywhere. It's one of the truest monopolies in today's, marketplace. With that being said, did you know? And I wanted to use Amazon as an example. I didn't want to use pump and dumps. I didn't want to use hyped up stocks. Amazon, from current price levels to previous highs, it offers 51% ROI. And it's not that Amazon's going to recover right away, but whenever does a $1 trillion company, 1.26 trillion, offer a 50% ROI? That's why I'm making this video. I think it's worth the conversation. You all do not have to agree with me. If anything, I would prefer for you to have your own opinion, right? But I think with that being said, it's worth having the conversation of planning out. The first step that I would take is there's so many stocks that have recently pulled on back. It's almost kind of overwhelming. So if you're a beginner investor, I would focus on max 3 stocks that you wouldn't mind investing in. This is not trading, meaning that you don't need to pay attention to this every single day. You don't need to watch this like you're watching paint dry. You're buying now to invest in the future, right? You expect it to rise later down the road, months from now or years from now. So that should tell you a lot about your intention. So it doesn't matter if it sells off a little bit more. If anything, I would expect it to, because I don't want you to set false expectations. This is why step 2, you watch your position size. The first time that you decide to buy, whatever it is that your intention is, if you intend to invest, let's say $10,000 into Amazon, your first purchase of Amazon, in my opinion, should not be more than 30%. So no more than $3,000. If you're investing with $10,000, no more than $3,000. But why? If Amazon's so cheap, why not buy it? Because if things get worse, which I want you to understand this, if things get worse, I don't want you to become emotional. I don't want you to become irrational. And in my experience, by keeping your position size lighter in the very early stages of a potential reversal, it allows you to tolerate the sell-off a little bit more. You are more likely to make an informed decision versus an emotional decision. I don't know if you've ever experienced that, where you're fully invested and then the market continues to sell off and then you just like freak out, right? It's not even about making rational decisions. You're just looking at that red P&L and it sucks. But guess what? You put yourself in that position. You went all in. Let's not make that same mistake. At least not myself, right? So what I decided to do is I'm going to pick no more than 3 stocks. These companies are companies that I intend to invest. That's my intention. So I don't care about the intraday fluctuation. I'm going to manage my position size in 3 sections. 1, I can buy the dip. First off, you don't have to do that. This is if you're okay with tolerating pullbacks. If you're someone that doesn't want to buy the dip because you're scared of it continuing to dip, I encourage you to be conservative. You can set alerts, and maybe when it begins to indicate signs of reversal, that's stage 2, right? When it begins to indicate signs of reversal, then that's when you can take your first position. But even then, you're not guaranteed it. I would still take that 30% position into consideration. So with that 30% position, once it begins to indicate signs of an uptrend, so that's higher highs, again, something where it's no longer selling off, you begin to see that market sentiment is not so bearish. Maybe interest rates as of May and June, right? They're front loading a lot of those interest rate hikes. So maybe after that, the market's going to continue to rise, right? Or begin to rise. When the market begins to prove to you, it's not what you want it to do, but it's when it begins to prove to you that it's indicating signs of an uptrend, meaning that it's actually making you money. That's when you take your second position. That's your other 30%. And even then, it's still not guaranteed that it's going to continue to rise. News can be shared, anything can happen and still cause the market to drop, which is why you're not fully invested. But when you see momentum, when you see that the market is so consistently bullish that it rises much quicker than it actually pulls back. Once you're actually either trading above the EMA line, trading above the moving average, and it's showing strong signs of growth, working towards recovering to either previous resistance levels or whatever your price target is, that is when you can decide to step on the gas and be all in. And even then, one of the things that I always try to encourage our beginner traders is, it's cool to be fully invested, but sometimes staying lighter allows you to kind of enjoy the experience a little bit more. Because at that point, you're not necessarily doing it for the money. You're doing it to prove to yourself that you know how to invest, that you know how to trade. And that's what I want out of this. Think about it. You have nothing but time to learn how to invest, to learn how to trade. So why are you in such a rush to make it happen? Why are you always buying the dip 100% with your entire account size? What, when you went to school, did you graduate the next day? Did you just start making money with a profession that you were working towards? No, it takes time, blood, sweat, and tears, right? Mental warfare when it comes down to trading in the stock market. But that's the fun part. Imagine if the stock market, every single time that you traded, you woke up every single morning at market open. For me, it's at 6:30. I trade live with my Learn Plan Profit group and stocks just went up. That would be amazing, right? But guess what? It would get boring, right? That's the reason people don't like their jobs. Because the same thing over and over again. There's no excitement, there's no challenge, there's no fulfillment. I think that's one of the things that I love most about the stock market, is that it is freaking challenging. Every day, it doesn't matter how much I made last week, last month, yesterday, every day it's new challenges. And I love that. So again, I'm not here to sugarcoat things. I'm not here to say that the market's going to recover right away. But in my opinion, I think that it's a conversation worth having, that the steps that you take now can benefit your future self. And make sure, again, if you agree, you don't need I would hope that you drop a thumbs up. I would hope that you comment, but most importantly, I really hope that you take action. Plan out your trade, your entry, where you plan to average up, where you plan to sell, where you plan to cut losses if things go south, right? The difficult conversations, all of that is planned ahead of time. Just try it. do your future self a favor and just plan it out. The third step is the execution. If you feel like you're confident enough and you want to take that trade or that investment, then great. But I think that you will learn a lot along the way just by simply planning. So that's what I'm here to preach. I just want you to look out for your future self. I'm not here to encourage you to invest in tech. I mean, it's not even just the Amazon, right? It's even banking stocks that are relatively pretty cheap, right? They're testing the moving average. Not even just Amazon, but we're looking at Apple. Apple's the most valuable company that's publicly traded. It's testing the moving average. When was the last time that it did this? The pandemic? And again, it's every previous recession that's viewed as an opportunity, every current pullback or current recession that's viewed as a risky time to invest. Why? Well, because it's always easier to look back and be like, dang, I should have bought more. I should have invested more. But why not do that now? Why not do it when it's happening? Because it's hard to see that light at the end of the tunnel. But that's what I'm here for. I really hope, again, my goal within this video is for you to just have that question with yourself. Have that conversation. Is it worth it to invest now? Not aggressively, but just to begin to plan it. I wish you guys nothing but the best. Again, I love to have a conversation with you guys. I respond to all of my direct messages via Discord, and that's going to be that first link down below. Friendly reminder, we are running one of our biggest sales ever this entire weekend. I trade live every single day, and if you're an absolute beginner and you want to be able to watch me trade live every day, that's going to be the second link in the description. It's going to be $150 off the Learn Plan Profit 2.0. I'm actually having an in-person session at our HQ, and if you're part of LPP, you get access to all of it. It's lifetime access, one-time payment, and you get access to the A to Z video lesson library, the daily live trading sessions at Market Open, the private Learn Plan Profit group chat, and of course, the Tech Buds Trading HQ, all of it. An experience like no other for a one-time payment, lifetime access, and today it's $150 off. That's that second link down below. I wish you guys nothing but the best. If you guys have any questions, again, I'm one message away. All the info is down in the description. And again, I hope that you guys consider subscribing. Like always, let's make sure that we end the year on a green note. Take it easy, team.